In this weekly Forex forecast for the week ending January 31st, we are talking about the DXY, the Euro, the Pound, the Australian Dollar, and also gold. So kicking things off, guys, with the DXY, not wasting any time here, we are seeing the market continue its push lower following the break of this September trend line. So this is the level here that I mentioned in previous videos. And the two scenarios that I gave for the DXY, and obviously there's two scenarios for every market. We have to at least respect both of those. And back here, what I was saying is that this was either going to result in the move up there toward 110.50 where we got the local top forming for the DXY, or we were going to get a breakdown below this trend line here to kick off that pullback. And we got the move lower. However, this part through here was really tricky. This week has been kind of difficult for markets, and it's why I really haven't been too active in the markets. Just because this right here, you can see that all of this through here around 108 was support for the DXY. So once we got the breakdown, this confirmed break here on this candle on Monday, this became kind of tricky because on the one hand, you had the DXY breaking this trend line and starting its pullback. However, at the same time, the market was also trading right around this pocket of support. Now, with today's breakdown, though, that does open up downside targets for next week, including this area around 107.08. So this area down here, this is an open imbalance from back here in this area, back in December. And then you've also got this quarterly fair value gap, also an imbalance around 106. Now, the reason I think that this is going to be really interesting in this area down here for the DXY over the coming days and weeks has to do with the quarterly time frame. So ignore the levels you see here because on the quarterly chart, they get kind of out of place here. But you can see where the DXY had consolidated or gone sideways throughout this entire period. Now, this is a quarterly chart, so each candle is 3 months. And what's really interesting is that the last quarterly candle broke out. So this was a confirmed breakout, and so far we are just getting a pullback down here into these highs. So this high right here on this quarterly candle is that quarterly FEG that I'm referring to, and that does come in down here right around 106. So this area down here is going to be critical support for the DXY, and it's really not that far away from it even at today's session. So I do think this is why it's kind of dangerous to just assume that the DXY rally is over, or at least that, there's not going to be any more strength here or considerable strength for the DXY for the foreseeable future, because I do think that these lows down here, that quarterly level is going to be the one to watch down here around 106. Now, keep in mind too that we also have the October trend line that comes in just below that. So off of these highs from back here, this is also going to be an area to watch. So you've got this trend line down here. Now, personally though, I do think that this area around 106, that quarterly level, is going to be the one to watch here for the DXY. And that could result in a pretty aggressive rally from the DXY because, as I've said recently, whenever you get months of momentum like we've had here from the DXY, this uptrend back here, the odds of the market breaking down and just doing this, right, is very slim. I mean, typically what you get is you get the first pullback here, you get the market coming into some of these highs and lows, and then you get the market, either bouncing from here or down here in this area and then ranging for a bit. Okay, and you get a pretty aggressive rally back up here toward this area, and you get the market just ranging here in this region. So that's kind of what I'm expecting for the DXY as well. I don't think we see this market go straight lower following this breakdown. And like I mentioned recently too, that's exactly what happened back here, where you got this bullish momentum through here, and the market came up, and then you saw some pretty aggressive rallies during this time, which this might not look like much, okay, but these lows from the low down here to the highs, you're talking about over a 1% rally, okay? And if you're a Forex trader, you know that that's pretty significant. All right, so this one here was about 1.7%. So you will get some pretty aggressive rallies from the DXY, in my opinion, from these areas down here. Now, of course, there's no guarantee that we do see 106 because, again, keep in mind that this is also going to be a critical support going into next week, this consolidation back here right around 107. But the bottom line for the DXY is that it is breaking below this area around 108. So a sustained break below this flips this to resistance for next week, and support comes in down here around 107, followed by that quarterly level around 106. So next up, let's take a look at the EURUSD, which is rallying so far this week with the DXY breaking down, of course. And we do have the EURUSD breaking two significant levels, the first one being this 1.035 area down here. Okay, so this served as resistance through this pocket. And you can see where we got the break, the close above, support right here on this candle, and then we got the retest at 104.60. So this was the other level that we've talked about, and you can see we got the retest right here on this candle and a decent little pullback this week as well. So if you are a range trader, this could have, served you well this week. But now with the market breaking above 104.60, we do have that potential for the market to continue higher up here toward these highs next week. And that's exactly what I'm looking for next week, as long as 104.60 holds as new support going forward. Okay, so right now we do have a breakout here from the EURUSD. You can see this on the weekly as well, where we're finally getting the break above lows like this back here. Okay, so as of right now, guys, it does look pretty bullish here for the euro, up there toward levels like 106.15. Now, keep in mind too, I talked about this in a recent video, but one area of interest goes back here to this 2-week breakdown. So these two candles, okay, back here, this one right here and also this one, you can see where we did get a retrace of this candle. However, this one back here, there was really no retrace in this area. So I do think this presents a pocket for the euro, an imbalance that we could see filled over the coming weeks. And this is especially true if you look at the 2-week time frame, right? You got this low from right back here, right around 107.70 or so, that could serve as a magnet for the euro because, again, you had this 2-week breakdown and then you saw a very shallow retrace into this area. So you've got this region up here that could serve as a magnet for the euro to where we do get a retest up here in this area before we get that pullback. Okay, now this could line up with the DXY testing that 106 area that we just looked at. So be sure to keep an eye on both of these charts if you are trading the euro. And by the way, guys, before we go on to the pound, if you guys do want to join us in VIP for real-time discussions, the full course, VIP-only videos, and also seeing my trades in real time, be sure to check out the link in the description of this video for 85% off lifetime access to the VIP group. Or if you're on the website, click on that Join VIP link. So next up, since we're on the weekly here, let's take a look at the pound, which is showing a very aggressive rally here so far this week, where this market is coming back here toward this trend line that we've talked about off of these lows going back to late 2022. This is what we saw break down back here. You can see the weekly close below and the retest right here on this candle. That was a couple weeks ago. Now, for the pound, I think an area of interest for a potential pullback over the coming days is going to be, first of all, this area around 1.25. So we've got lows through here. This is probably the most obvious area on the chart in terms of a pivot. However, this candle back here also is one that I would keep an eye on because we always talk about this where you get a candle like this here. And this was a significant candle because it did close the pound back below this key level, this key area. Okay, so we got the close below, retest as resistance, and the further sell-off. So this candle up here has yet to really see a retrace. And so I would like to see the pound come up here into this region before even thinking about a short here. But even then, I would really have to see the DXY start to bottom out because, like I said, I do like the DXY down there towards some lower levels before we can even start talking about a bounce from the USD. So looking at the pound, this is what I'm watching over the coming weeks. You can see where we are getting the market moving, potentially within this descending channel. Now, this is a bit unconventional, but it is something I tend to do where you've got these lows down here off of this level and you've got this high up here. Okay, now this region through here could come into play as resistance with these highs as well. Okay, we've got this pivot around 1.2617 or so that could come into play as resistance over the coming days. So this is certainly going to be one to watch, but like I said, I'm not going to rush into anything here until I see what the DXY is going to do next week. So a couple of weeks ago, I talked about the Australian dollar and this descending channel, saying that this was something to watch here because this could present an opportunity. And it's really as simple as this. You've got this descending channel, you've got the market respecting it here on the daily time frame. And what you'll notice is this past week, we got the breakout here on this candle. And notice where we got the retest very close to the top of this channel and right off of these recent highs. So this was potentially a buying opportunity if you saw that video. And also if this is part of your style, obviously. But you can see where this level right around 62.75, this in my opinion is going to be the area to hold next week. Okay, so you can see all these closing prices through here. This is the one that as long as the Australian dollar is holding above this, then I am short-term bullish toward levels like this right back here, right around 63.40, and then potentially around 64.35. Now, obviously, this all hinges on levels like this staying intact as support. if we were to see the Australian dollar next week open up, test this level up here and then rotate lower and close back below here, then this becomes a fake out. And this goes for any chart we're talking about today. These things can change very quickly. So that's important to keep in mind. Now, this level back here is interesting because if you look at the weekly time frame, what you're going to notice here is, and again, we talk about this a lot, you can see where this low right back here in November is so far untouched, right? We have not seen a month come up here and test this level. We got a very aggressive sell-off here in December. So I do think that we could see this level retested here over the coming weeks because everybody's going to be watching these lows back here. And even though those could attract some sellers, I do think this one up here, right around 64.35 or so, is going to be the one to watch here for the Australian dollar. Okay, so all in all though, guys, I think that if you missed this opportunity back here on the breakout from this channel, all right, so this one right here, the breakout and retest, I think if you missed this right here, it is getting a little bit tricky to play. The one thing you could look for would be a close above this area next week and then a move there towards 64.35, or alternatively a pullback down here into support early next week for a continuation of this move. And like I said, if the market fails to hold above areas like 62.75 next week, then we could get that pullback from the Australian dollar, as that would represent a failed breakout. Gold has had an incredible few weeks here with the market up considerably from this low back here in December. However, it is also approaching that all-time high right around 27.90. So you've got to be careful here. And we didn't quite see a retest today. So I do think that early next week, we could get a retest up here in this area, potentially a sweep of this high from back here. But from there, I think, again, you've got to be careful just because we could get a pullback from gold down here towards some of these levels. Like this area around 27.16 is definitely one to watch. There's no guarantee that we do see a pullback down here, but a couple of things. First of all, even though we have seen a nice rally here from gold, it's obviously been rallying for quite a while as well. Even though we have seen a nice rally from this market, it's important to keep in mind too that ever since really September back here, you have seen gold do this, okay? And I'm certainly not, encouraging you to short this market, but the bottom line is that it has been range bound, right, ever since September. So until the market can get above this high up here in a convincing manner on the high time frames, you've got to consider that it's really just a range bound market for now. And furthermore too, you do have imbalances that have built up down here around 27.16, just below that mark, in fact, because you can see that this high from right back here following the breakout, we never did get a retest down here at this level. There's a very, shallow retrace into this candle right here on this candle. So we could, if we see a rejection from here, either a sweep up here, we could get that pullback down here to levels like this before gold can continue higher. All right. And that would be a normal reset, guys, a healthy reset. I know a lot of people, whenever you talk about shorting gold or a bearish scenario for gold, even if it's just a short-term pullback, I know people kind of cringe at that, thinking like, oh man, this market's been up, for months and even years. Why would you think about shorting it or talk about a bearish scenario? But again, guys, that would be a healthy pullback for this market, especially considering that it's trading just below that all-time high around 27.90. There are going to be a lot of people out there trying to defend this level, a lot of profit taken as well. So just keep that in mind as we head into next week. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Claim your 85% off lifetime access. See the link in the description of this video, or if you're on the website, click on that Join VIP link. Have a great weekend, and I will talk to you again next week.